Hello and welcome. I'm Zahra Sethna, host of the Collapse Life podcast. Our guest today has made a career of being a contrarian. He's the co-founder and CEO of EasyDNS Technologies, a Canadian domain registrar and DNS provider that was one of the earliest established when the internet went public, as it were. Entrepreneur and writer Mark Jeftovic opines prolifically about Bitcoin and cryptocurrencies, CBDCs, and many other topics at bombthrower.com and the Bitcoin Capitalist. We're very happy to welcome him to Collapse Life today to talk about all of that and more. So, Mark, thank you so much for being here.
Hi, Zara. Thanks for having me.
It's great. I'm so excited for this conversation because I have a lot to learn from you.
Okay. Well, I'll do what I can.
Great. Thank you. So, just for context, the whole purpose of Collapse Life is to kind of highlight the fact that we're in a transition and to try and put some definitions around that so people kind of see what's happening and they can position themselves within that. But one of the big challenges is really kind of defining what is this transition. It's many things all at once. So what is your take on the change that we're going through? How do you see the transition playing out?
I see this as the big transition is from centralization to decentralization. It's basically the structure that comes naturally out of the computer network era. So, we've been in the industrial age for, call it 100, 200 years. That's sort of a linear top-down hierarchical structure, which was sort of how society organized itself just to be able to operate at mass scale. We got a lot of benefits out of that. We got a lot of gains out of that. But then once the information era kicked in, telephone, radio, TV, and then computer networks, the architecture changed just because the flow of information sped up so much that top-down doesn't really work anymore. In fact, you start to get this declining return dynamic. And I think the political tension of our era is largely between people who want more centralization, like people who think the government can solve all your problems and experts know all, and decentralization, people who believe more that decisions should be made closer to where they occur, and that you let things run their own course, and they sort of have this natural set of shock absorbers built into it. And I think that's the defining schism or tension of the day, is centrality versus decentral. And it sort of makes the whole left-right dichotomy a little bit of a false dichotomy. And that's why you see these like weird inversions now where what's, the so-called extreme right are the free speech absolutists and the left wing are the war hawks. And it's a complete inversion of what it was, 30 years ago. It's because the fault lines are happening along a different axis. I think.
Right. So whether you're left or right, you're going to want to maintain whatever control you have. So that centralization is something that you're going to want to hold.
Yeah, that's where the commonality is. So that's why you get a uniparty where both the left wing and the right wing want like more censorship, more control, that sort of thing. And then there's sort of these other ways of ordering or structuring organizations, people, society are like, no, we actually like, you're down in Texas, and even the governor of Texas is doing things a little more, well, you know what, if you're not going to close the border, we're going to close the border. Right. And it's just kind of happening along those lines.
Interesting. But obviously, we are highly centralized as a society, certainly in North America. And if you just think about like our food system, for example, it's mainly controlled by, say, 10 companies. Our technology mainly controlled by 3 or 4 companies. So is that decentralization happening, or are we going to have more centralization before it all just breaks down into?
I think it's really hard to know when the top tick on all of this stuff is. Like, you take cancel culture, which is a symptom of centralization. I called the top on cancel culture incorrectly like 5 times over the last 5 years. Like, this is the top. It can't get more cancel-y than this. which I said in like 2018, 2019. I almost didn't put out my book on cancel culture and resisting deplatform attacks because I thought I missed the boat. Like it's all going to calm down from here. And that was at the beginning of 2020. And it just went off the meter. And I thought it can't get much worse from there. I will say, I do think, I've been wrong so many times, but I'll say about the timing of it. But the pandemic really was the acceleration event of the century. I think the blinders came off for so many people in the heels of the pandemic that really may have been the top this time for real. I finally get it right. That beyond that point, it's like, listen, the talking head on the news, he doesn't know what he's talking about. He's just regurgitating prepackaged talking points. And these experts, they don't know what the hell they're doing. And these policy responses are just wrong. And so this notion to say anyone who colors outside the lines or say something that isn't officially endorsed, maybe we should hear them out. Maybe we should listen to them. I mean, we're seeing so-called conspiracy theories from 2 years ago are now like, oh, okay, everybody knows that it's not relevant, like the lab leak or anything like that. So maybe that was the top, right? The whole pandemic. And now there's going to be this backlash to sort of retain control. But I think so many people's blinders have come off that this diffusion into decentralization will finally get that critical mass over the, I don't know, years, decades, whatever.
Yeah. It has to happen, but I think at this point it feels still like there's a lot of people who are still kind of addicted to the way things were, and that sort of centralization and benign government looking after things for you. There's still a lot of people who kind of subscribe to that.
There's a lot, but I actually think it's diminishing. I still live, we still live here. We were talking before we were rolling. I'm in Etobicoke, right? Etobicoke, Ontario, as white picket fence Toronto as you can get. And none of my neighbors watch the news anymore.
Oh, wow.
They all say like, this is like worse than Pravda. It's all crap. And these are so-called normies, and they're all fed up. They're all disgruntled, and they don't believe it anymore. And I think a lot of people maybe are going along like just silently not voicing those things because they still don't feel it's safe to. I mean, it was a career ender not very long ago. You liked the wrong tweet and that was it. Like you just like your life was over.
Right.
But I think the public sentiment is a lot larger in that disenfranchised, disgruntled, loss of legitimacy camp than people believe, than people realize.
Chris Martenson at Peak Prosperity talks about private knowledge versus public, and there's a tipping point at some point where you go from people talking about it quietly in their living room to it becoming public, and we may be reaching that tipping point. And I mean, if you say that suburban Toronto is that sense is there, but it's not quite out there yet, that's actually maybe heartening. I mean, I think it means that things are going to get worse before they get better, but if we're all speaking the truth and we're all speaking it to each other, that's a good thing.
Yeah.
So I wanted to get a little bit into talking about cryptocurrencies and Bitcoin, because that's one of the things that you know so much about. And it fits very much into this kind of decentralized model that we're talking about. So we've talked on this channel before with people like Peter Grandage, who gave us advice about, get yourself out of debt as quickly as possible. And we've talked to John Rubino and Egon von Grers about preserving your wealth with tangible assets like gold and silver. One thing we haven't talked about, and I have a lot of questions about, is cryptocurrencies. So this is something that you've spent a lot of time on. So give us the pitch about why crypto.
Sure. I mean, my background in terms of this, we call it contrarianism or this advocacy for sound money. I know John Rubino, and he's a great guy. And I ended up actually taking over Dollar Collapse, his website, from him. So I I'm pretty grounded in gold. I've been a gold investor since the late 90s. Gold, silver, still love it. So for me, Bitcoin and cryptocurrencies were an extension of sound money principles that actually fits well in this era of decentralization I'm talking about. This, where the base layer of a lot of society are computer networks. Even though those computer networks are tying together tangible, firm infrastructure and systems, the Bitcoin and cryptocurrencies uh, lend themselves well to this new architecture. And so I'm one of these Bitcoin guys. I prefer, there's a, when we talk about Bitcoin versus crypto,
Mhm.
so as a Bitcoin guy, you're either Bitcoin and gold, Bitcoin and precious metals, or you're Bitcoin or precious metals,
Okay.
right? I'm and like they're both part of your toolkit. They give you different kinds of optionality. And the line I've said a lot to my readers is we worship at the altar of optionality. Like optionality is the precious commodity in this day and age, especially the turbulence and the instability, this transition we're going through. You want options. Gold gives you options. Uh, Bitcoin gives you options. They give you different kinds of options and they fit well together. The whole schism between the two camps has always baffled me.
Mhm.
Not bad. I mean, I understand why a gold bug would hate Bitcoin if you're sort of haven't really opened your mind to the possibilities. And I see why some of the Bitcoin maxis go, gold is a barbarous relic. But I think if you really set aside your predispositions and look at what each of them brings to the table, there's such a complementary set that you really have a powerful toolkit when you employ both in your life.
So, what are the upsides to Bitcoin? What does Bitcoin have that gold or silver wouldn't have?
So Bitcoin takes the monopoly on money creation away from the state. It's a non-state digital bearer asset. And it's like the easiest way I can describe it as to why it's like a sound money is because it's backed by energy, because you have to create it through Bitcoin mining, right? So what that means, and you hear all these fear, FUD pieces about, one, Bitcoin mining is going to use all the energy in the world by 2020, which obviously didn't happen. Um, because what it means to mine Bitcoin is that market participants in a completely free and unmodified or unmanaged market have made an economic trade-off decision. They've said, I'm going to use this energy to mine this Bitcoin instead of using it for something else, right? And that creates this sort of economic trade-off value that gives Bitcoin its value. That's why, it started at pennies back in the day when no one really cared and it was just this mad scientist lab experimenting. And then as more people started to see the value and the network effects kicked in, it's like it took more and more energy to mine a Bitcoin. And suddenly it's like, yes, this makes sense. So now you have this Bitcoin that all this energy went into creating. Michael Saylor likes to use the analogy like this is practically stored energy, because now if there's this economic value attached to it, and all economic value is in the mind of the market, by the way, there is no, oh, well, gold has tangible value or like inherent value and Bitcoin doesn't. Well, no, neither of them
Mhm.
have inherent value unless the market imbues it with that. So
Mhm.
now you have this Bitcoin, all this energy went into creating it, and you can move it across the planet in the blink of an eye,
Right.
right? And no one can stop you from moving it across the planet. And no one can take it away from you. I mean, I'm in Canada. You're ex-Canadians. We saw what happened with the truckers,
Yeah.
right? The bank accounts being frozen. That was a huge wake up call for a lot of people. That was the biggest Bitcoin sales pitch I've ever seen in
Right.
modern world. And that can't happen with Bitcoin. You keep it off the exchange, you keep it in custody. You can even memorize your seed phrase, and you basically have a brain wallet.
Mm.
And get out of a hot spot with this clothes on your back and your skin intact, and you can reestablish your wealth someplace else. So it gives you those options that you don't have with gold. Now, gold has that 5,000-year history that people say, like, this thing, an ounce of gold can buy you a good suit now and 2,000 years ago and probably 2,000 years in the future. It's going to hold that value. But try moving, $1 million worth of gold in a hurry.
Right.
You're going to have a problem with that. So,
yes. So that makes a lot of sense. Gold, though, is a finite resource, right? It's not something that at some point there's a limit to. You can't create more gold. Is Bitcoin the same? Is
yeah,
there?
Bitcoin actually has a harder limit than gold, because there may be gold deposits out there that we haven't discovered yet, and gold has this natural inflation rate of 2% a year, call it.
Mm-hmm.
Bitcoin goes by mining, as you know. Every 10 minutes, a new block is mined. Every 10 minutes, 6.5 Bitcoin, I think, is the block reward right now, gets awarded to the miner who writes the next block or proposes the next block. Bitcoin will only have 21 million coins ever, so it's a hard limit. It's baked into the protocol, and every 4 years, it's every 210,000 blocks, but every 4 years, the block reward cuts in half. So the natural inflation rate of Bitcoin cuts in half every 4 years. It usually creates a supply shock in the system, and that's why you have these sort of quantum leaps in the Bitcoin price when you map it out every 4 years or so. We've got another it's called the halving. There's another one coming in April. At that point, this halving is interesting because the natural inflation rate of Bitcoin drops below that of gold for the first time. So gold will be going at about 2%, and Bitcoin will be going, like, the block reward drops to like 3.75, and it drops below that 2% mark. And so it's a harder fixed asset than gold is. I mean, even if, the pie in the sky people say, oh, we can mine gold off of asteroids in the next 50 years, you're not going to be able to mine Bitcoin off an asteroid in 50 years. And so one of the objections is, well, anyone can fork Bitcoin, they can change the protocol, they can do all that, and all of that is true. However, that it will cease to be Bitcoin at that point. And so then what I talked about, value is imbued by the market will not imbue that with value. And there's already like innumerable forks of Bitcoin. There's Bitcoin Cash, there's Bitcoin Gold, there's Bitcoin Satoshi's Vision, and just the market hasn't ascribed that value. And more power to them, right? I mean, if somebody actually comes up with a fork that actually does something that's compelling to the market, then the market decides. But at this point, it doesn't look like that's going to happen anytime soon.
Right. So there was a time when Bitcoin was kind of a couple $100 per coin, and now it's correct me if I'm wrong.
41,000
41,000.
Yeah.
So for a lot of people, that's kind of out of the realm of possibility. So has the train left the station in the sense that now Bitcoin is really kind of only accessible to the very wealthy?
No, not at all. In fact, so the one big misconception a lot of people may have is they think they have to buy a single Bitcoin to even get into the game. And that's not the case at all. You can buy $10 worth of Bitcoin. I tell people who have none, the most important thing is get off zero. That's kind of a mantra, because we see Bitcoin as repricing on an order of magnitude that even sounds crazy to us today. After a run from no market price to 10 cents to a high of $70,000 US or close to it, it was 69 something. Here we are sitting at 40,500 US. Did we miss the boat? No. You can buy it in fractions. You can go down to a Bitcoin ATM at the store within $10 a week and just start, accumulating it. And what I do with sort of gauging, well, how high can it go? I look at the total market cap of Bitcoin, which is right now just under $800 billion. Okay. The total market cap of gold is $10 trillion. And I always say like half of that is investable because the other half is in jewelry and industrial uses and stuff like that. So there's $5 trillion of investable or invested gold out there. So for Bitcoin to go from under $1 trillion to 5 trillion, you sort of see like how much that would imply in a price move on the point. But I don't look at gold as the sort of how early we are in the cycle of Bitcoin. I look at bonds. Okay. So bonds is dead money walking. Bonds are the anchor of the fiat money system, right? They're based on debt. We have a monetary system that's built on debt, has a counterparty built in, and we can never shrink the pie. Like we can never pay off all the debt that's in the world, and we can never stop expanding the debt. And we're trapped in this doom loop of debt. And bonds are basically the denominator, the base layer of that sort of system that we can't throw the switch on it. And it's just going to sort of burn itself out, blow itself up or whatever. Right. There's anywhere between 150 trillion to 400 trillion of bonds, depending on what you count. Sovereign, corporate, whatever. I just use 300 trillion is usually the number I use in the back of my mind. I mean, at one point, there was like $20 trillion of negative yielding bonds, right? Negative yielding interest rates on bonds. It's come down now with this latest cycle, but I'm sure they're going to be back. So I look at the size of the Bitcoin market cap and the size of the gold market cap for that matter, and I compare it to the bond market cap. And I think at some point, it's now clear that Bitcoin's here to stay. It's now clear that crypto's here to stay. Large institutional allocators, right? Endowments, family offices, mutual funds, pension funds, they haven't really allocated to Bitcoin because they didn't have the regulatory clarity. I was talking with a CEO of a gold vault last night, and she was telling me, in the 70s, like mutual funds would have a 5% allocation to gold, right? Now it's like 1%. They're starting to edge back in. I think the same thing's going to happen with Bitcoin, right? And so why does a hedge fund or an endowment or a family office have anywhere between 1 and 3 or 5% of gold? It's a just in case, right? We represent this pile of capital, and just in case there's a hyperinflation or a currency collapse or something, we want this just in case pile, which we think is going to, save us some of our purchasing power. Well, Bitcoin is the ultimate just in case asset, and you don't have to have very much of it to give you this wildly asymmetric upside to it. So we're under, we're 800 billion, and just getting that regulatory clarity now. So, what does it look like when Bitcoin is a $5 trillion market? What does it look like when it's a $10 trillion market? What does it look like when 1% of a $300 trillion or 2% of a $300 trillion bond market says, just allocate this 2% to Bitcoin while we figure out what to do with the rest of this? That when you look at those total market cap numbers, you start to see how early we still are in the Bitcoin story, right?
Yeah. And so Bitcoin is just one in the category of cryptocurrencies.
Correct.
And it's probably the best known. There are others, Ethereum and others. Do they all work the same way? Is Bitcoin kind of different in its protocol? What's the difference?
Yeah, so Bitcoin, it's, the original, and it's structured in a way that I don't think very many of any of the other cryptos are structured. And the big difference is that Bitcoin is truly decentralized. So when the protocol was announced through a white paper to a cryptography mailing list, and whoever was interested basically just started writing software to mine it. And then like in January 2009, the first Genesis block was mined, and there was no pre-mine, or there was no sort of like inside track of people sort of hoarding a portion of the spoils for themselves first. It's just anyone could have joined, anyone could have started mining Bitcoin. And it was just a completely open source thing that has no central control now. Whereas most cryptocurrency projects, like Ethereum, when it launched, it came out of Toronto. Like Vitalik Buterin was living in Toronto when it happened. They did a pre-mine. They issued themselves a bunch of tokens. They did an ICO, and that's the model that almost every other cryptocurrency followed.
Okay.
Even though some of them are trying to decentralize themselves into like DAOs, which are like decentralized autonomous organizations and stuff like that. But where the distinction is being made, you can look at the regulatory approach to them. Bitcoin, separate from all other cryptocurrencies, is being regarded, at least in the US, as a commodity. And so it's being regulated by the CFTC, which regulates commodities, while cryptocurrencies are either being charged with or accused of or being treated as securities, which puts them in a different regulatory environment because there's centralization. There's this thing in the US called the Howey test that, sort of determine, and that's like from the agriculture era, apparently. It's like from 1930, or I can't remember the year, which determines if something is a security or not, if an investment contract is a security. And they're saying all of these crypto projects belong to this sort of framework of securities. And so that alone makes Bitcoin something different right there, because it's sort of widely regarded as a commodity. Even Basel banking structure has sort of started to incorporate Bitcoin. Actually, they do have some guidances for cryptos as well, as to how much you can have as a tier one reserve asset in a banking capital structure. So that kind of shows you just how ensconced into the system it's already become, and it's still very early. But it also shows why Bitcoin is a little different from the rest.
But if it is becoming part of the sort of regular system, does it not then become part of the sort of centralization model? How does it maintain its original kind of rebellious nature of being the decentralized model if it's now becoming part of the establishment?
Yeah, because nobody can control. That's where the proof of work mining becomes so important, right? And anyone can run a node, which becomes important. You don't have to spend a lot of money to run a node. A node basically observes the blockchain, keeps a copy of the blockchain, and verifies all the transactions for you. A miner participates in the proof of work mining to attach new blocks to the blockchain, and the code is open source. So the mining network has so many computers in it. It's so powerful that no one entity has any control over the mining. So it's just kind of this runaway train that's doing its own thing. Anyone can sort of anyone can run a node to verify the integrity of the blockchain as it's going forward. And we all have a copy of the source code. It's all open source. So no one can come along and say, well, we now want to make Bitcoin where if you use it for this purpose, we're going to confiscate it. It's just the system's not designed like that. Unless you have, everyone has their private key, and there's nothing anyone can do about your private key. And yes, the blockchain is fully transparent. You can see all these things moving around on it. But my comment on that is there's nothing anybody can do about it. So the central authorities may know that I sent you some Bitcoin, or you sent this other person over here Bitcoin, but it's like, yeah, and so what? What are you going to do about it?
Right.
You can't do anything about it. So what we had in Freedom Convoy 2022, where it's like, well, anyone who donated to this thing, we're going to freeze your bank accounts. Well, that can't happen under a Bitcoin standard. Right. So
yeah, okay, that makes a lot of sense. That kind of ties into the next thing I wanted to ask you about was this new book, The Great Taking. So it came out pretty recently in the last couple of months by a former investment banker, David Rogers Webb. And he lays out in a few short chapters kind of how, if you own securities, your understanding of ownership might be completely wrong. And then I think the role of crypto starts to make a lot more sense, just as you described. But I wanted to ask, have you read it, and what is your take on it? Can you help kind of lay it out for us?
I've read a large chunk of it. I had a lot of readers asking me about it. I've been meaning to watch that documentary that's
Mm-hmm.
circulating about it. Um, so we'll start with what he says is
Mm-hmm.
essentially correct, and it comes down to what I called sort of this increasing level of abstraction
Mm-hmm.
in the world, right? In how we approach our systems. There's a book I reference a lot by a Canadian called W.R. Clement. His name is W.R. Clement. His book was called Quantum Jump. He
Mm-hmm.
wrote it in the late 90s, and he basically says that the Enlightenment era, that 500 years of scientific progress, occurred because of a quantum jump in the level of mental abstraction. And at the time, he said it was the discovery of perspective in art. Like
Mm-hmm.
before then, paintings were two-dimensional, and you could see it in those medieval, banners. And then once we started to put depth into art, that set off a whole chain reaction in everybody's brain, and suddenly we've got double entry accounting, and we've got the Gutenberg press, and it sort of touched off all of that. And I think I've always been saying that what's happening now is an extension of that we have these increasing orders of abstraction. It's not a good thing, it's not a bad thing, it's just like this is just kind of how we're evolving. This same level of abstraction is happening in how we think about ownership. So in the old days, you would give a company some money and they would give you some stock shares, and you'd walk around with those stock shares, and that was basically your ownership in that company. But even before now, it didn't take long before, like as computers started happening, and the trading volume started increasing, it's like it kind of became unwieldy. So we started having like clearing houses, and we started having brokerage accounts. And now, instead of having stock certificates, you just have this thing in your, on your app, on your phone, or in your desktop.
Mm-hmm.
And the subtle shift that's happened is you don't actually own the stock certificates, and Webb is taking it a step further, and he documents in meticulous detail how you don't actually have ownership in the company anymore.
Mm-hmm.
You actually have just a claim on these shares that have ownership in the company. And at the end of the day, when you unwind all the legalese around where these shares are sitting, they're actually owned by these clearing houses and these, these sort of like settlement networks. And that's who really owns these companies. And you just have this claim on it. And he's not wrong. And that's accurate. Where I would maybe differ with him is, he thinks it's part of a large orchestrated conspiracy to eventually like spring this trap and say, aha, none of you own anything. And we all, this tiny cadre of people own everything. Yeah, I don't know. I tend to take conspiracy theories with a bit of a grain of salt, but he is right about what is happening. And the reason I was sort of less likely to sort of take the conspiracy aspect is because what he was describing played out in microcosm in the crypto ecosystem almost exactly like what he described happened over the last 75 years happened over the last 5 years in crypto.
How
Like it's
so?
just the same thing is happening on fast forward, and that is, you want to get involved in Bitcoin, you sign up an account at some up and coming exchange called FTX, run by this genius called Sam Bankman Fried.
Got it.
And you pay him some money, and you've got some Bitcoin in your account. And it says right there that you own a Bitcoin, and you feel good about yourself, and you leave it there. Well, you actually don't own a Bitcoin. You have a claim on a Bitcoin in your FTX account. And at the end of the day, FTX really owns that Bitcoin. And maybe there was a conspiracy inside FTX to sort of game that, and they did, and they got caught, and it destroyed them. But at the end of the day, it was a mantra from the whole Bitcoin scene: is not your keys, not your coins.
Mm.
So uh, the proper way to take that one step further is you buy your Bitcoin on an exchange like Coinbase is a legitimate exchange, but even Coinbase will tell you you should withdraw this into your own wallet and have it in self custody.
Right.
Now you own that Bitcoin. All right. Now you are the owner. You don't own a claim on it. You own it. Same thing with, you could request your stock shares from a company, or if you have a private interest in a company, you actually own a piece of that company. But the big takeaway from it is, if you let, like, that level of abstraction between ownership and claims and even just frictionless settlement of accounting, if you don't think it through and equate that with ownership in your mind, you could be in for a nasty surprise someday.
Right.
Right. And so what I tell my readers is like, look, we cover the Bitcoin stocks and the crypto stocks. And I'm like, okay, we don't own these because we think the monetary system is going to collapse and owning shares of Coinbase is going to save our asses, or, pardon my French. We actually don't want the monetary system to collapse, but we own these shares because we want to garner outsized profits from exposure to this sector while the system is still functional.
Mm-hmm.
If the system goes completely dysfunctional, we don't think our claims on these shares are going to be much help to us.
Right.
So we have other things that we think are going to be help to us. We have real gold, we have real Bitcoin
Mm-hmm.
off the
Mm-hmm.
exchanges in our wallets. That's what's, we have your second passport, you have your property in another, like, those are the things that you have for the all bets are off situations. These other things, yeah, they're abstract, they're claims, they're these ephemeral things. And if we really get into grid down, all bets off, force majeure, none of that stuff is going to help you.
Right. Right. So it goes back again to that optionality that you were talking about,
Yeah.
having, being diversified so that all your eggs aren't in one basket, and also really understanding. And I think that's where the parallel between how you just described ownership of Bitcoin versus shares in some sort of ETF,
Yeah.
that parallels to tangible gold. And you already talked about why Bitcoin can be beneficial to gold because you can move it around really quickly. And so that makes a lot of sense. And whether or not it's a conspiracy or just opportunistic, the chances of what Webb describes is the chances are all of that can be taken away. That's why he called the book The Great Taking. So
Yeah.
maybe someone planned it out and this is the end game of a decades long plot, or maybe it's just like, oh, look at this, we can, I mean, 2008 I think was the same sort of thing, where we didn't know what was going on with these collateralized debt obligations and all the bundling and all of that. We didn't know. People saw opportunity to make money, and it all came crashing down. We know what happened. So
Yeah.
yeah.
I always err on the side of, perverse incentives
Mm.
more than conspiracy, because I just think that we live in an out of control world. Like, nobody's in charge, nobody controls the world. And I often say many people find that more terrifying than the prospect of we live in an Orwellian dystopia that has run out of Davos. They kind of find a little more comfort in that, it seems, because it's like somebody's in charge at least, and they're orchestrating every event that happens under the sun. And I'm like, no, it's all out of control, and nobody knows what's going on, and we're all flying by the seat of our pants.
And we can't blame just one person or one small group of people. It's just
Yeah.
kind of the
I mean, they
enemy.
carry outsized influence, and technocratic management is such a disaster that it has one superpower, and that is to make situations worse. But, like, nobody is in charge, and at least that's what I think.
It's true. It is actually more horrifying to think that it's just all around us, and
Yeah.
some of it seems sort of inevitable. So one of those things I think that seems seemingly inevitable that I wanted to ask you about was central bank digital currencies, CBDCs. How close are we to that becoming a reality, or do you think that there's a chance that that won't come? How worried should we be?
there is a chance that it won't come, and actually, if it doesn't come, that's going to be even scarier. Uh,
Mm.
well, so there's two kinds of central bank digital currencies. There's what's called a wholesale CBDC, and there's a retail CBDC. And a wholesale CBDC, they're already up and running. FedNow launched in July
Mm.
23. There's a few up and running in Europe and all over the place, really. Wholesale CBDCs are just interbank clearing systems, and they're just better ways of clearing payments between banks. And they carry with them a whole risk of their own. And then what I think the public imagination thinks of when it comes to CBDCs is sort of like that Black Mirror Chinese Communist Party style social credit system, which is more of a retail CBDC.
Mhm.
And so it's important to make that distinction. The way I lay it out, wholesale CBDCs pose a risk to the banking system itself, because you can have a bank run that used to take a few weeks to unfold can happen in like 30 seconds to midnight on a Friday night. We saw a hint of that with what happened with Silicon Valley Bank
Mhm.
last year, and that was before FedNow launched. So that was stunning in the magnitude of its implosion, and that happened over like 24, 48 hours. With a CBDC, like when with FedNow in place, that could have happened in, like I said, 35 seconds, the same thing. So that's the problem with wholesale CBDCs. Retail CBDCs pose risks to individual freedom, right?
Mhm.
I think with where technology is going in the world, there's going to be a lot of unemployment. A lot of jobs are going to get automated away. We're headed for a world of universal basic income, whether we like it or not. Canada's actually just making some announcements in that regard. And we have these fiat money systems, which are, devaluing themselves closer and closer to zero with every passing day, literally. So again, perverse incentives, right, creates this impetus towards CBDCs, and again, then there's these tantalizing things for policymakers to say, well, if we have to give people UBI, then wouldn't it be nice if we could say we want you all to eat less meat to save the environment, so you can't spend this UBI on meat, or you have a quota, um, and so I'll just parenthetically say, I think the whole climate crisis is kind of made up in the sense that it's used as a justification to do global austerity, and that's incentivized by the debt problem. We have this
Mhm.
debt bubble, we can never pay it off. We have to ratchet down the standard of living of everybody else except the policymakers, and so we're going to use this climate crisis cover as the sort of reason why everybody else has to eat bugs and you know um,
Yeah.
just degrowth is the mantra. Degrowth is really austerity, and somehow let's let the air out of this debt bubble without destroying the economy.
Mm.
CBDCs are this magic bullet. It's like, okay, well, we can accomplish this goal. um, we can extend the lifespan of these fiat currencies by a few decades. We can kick the can down the road yet again. And in that sense, yeah, I guess it is coordinated because everyone's thinking the same thing, because it's just such an obvious solution and the technology is there and people are addicted to their phones anyway. And a lot of people are going to want it. They're going to say,
Yeah.
hey, I just get free money on my phone every month. And
Right.
what I tell people is when they come, it's going to be incorrect to think of it as money, because
Right.
it's actually anti money, really. You can't save it. You won't be able to save it. You won't earn interest on it. You won't be able to spend it any way you want. And, and I think of Bitcoin as the anti CBDC. And we can park for a minute the inevitable question: why would the government allow Bitcoin? Okay, we can get to that. But the CBDCs themselves, they will either launch as or morph into social credit systems.
Right.
I think that's just got this inevitable logic to it. Even if they say, oh, just this one time for this emergency, we're going to like put this thing into your CBDC. This is not crazy tinfoil hat stuff. You just read the papers, the white papers from the Bank of International Settlements, from the International Monetary
Right.
Fund, from the Bank of Canada, from the Bank of England. Like they all just lay it out. Like, yeah, we could program money. We can go negative interest rates. We can force, conversions from here to here. It's all in there. It's all laid out. It's
Right.
not, it's spoken of very matter of factly. Now, the good news is they're a long way off. Like to build these things from the ground up, I don't even think they have time to do it because the global monetary system is coming unglued, right? It's coming unglued every passing year.
Yeah.
I think to sort of jerry rig, stick something together with spit and twist ties, they're going to use an existing cryptocurrency. I always said Ethereum. Ethereum wants to be a CBDC. One of the founders went to a Davos meeting in like 2016 or 17. I can't remember which year, and said like, we're the perfect base layer for a CBDC. Ripple wants to be a CBDC. So there's some cryptocurrencies that want to provide this functionality to global central banks. And I think that's probably the most likely, like some sort of hybrid between a stable coin, which is just a cryptocurrency that's pegged to like a fiat currency, a stable coin, a crypto like Ethereum, and that would be the base layer for like, tokens built on top of that system that are CBDCs. Now, I said they may not ever get there because the global financial system is coming unraveled at an accelerating rate. Like it almost came unglued in late 2019. And then, like, fortunately for the bankers, COVID hit, which some people say, was that really a fluke?
Yeah.
But, a lot of people who are not crazy and they're very credible have said without COVID, the central banks would have had a banking crisis in like the early months of 2020 because we had that reverse repo meltdown happening in late 2019. So this system is coming unglued. It's why the Fed has already started to pivot, even though inflation is not coming down. They just say it's coming down. We're well above the 2% target. This system, I don't know how long it can hold together. It always holds together longer than people like me think it can. But, there is a possibility that it all comes apart before retail CBDCs can roll out. But let's say it doesn't, then I think we've got a good, 3 to 5 years before they really start to hit. And then, you have a window to start positioning. You'd probably even be able to keep positioning once you're in the window, because I basically say if your economic sustenance is reliant on the state, you will be captured in the CBDC system. Right. So the name of the game now and always, and even if CBDCs weren't coming, is to be financially self-sufficient, like to not rely on the government for your financial or economic survival. That's like, don't. As long as you can do that, you can stay outside of being completely captured by this CBDC system.
Absolutely. And then layer in the other advice that we were talking about, get out of debt and have tangible assets and things like that.
The debt thing is interesting. I'm my parents are European, so we're like, debt is evil, right? And so I've eschewed leverage for most of my life. But once you get into the Bitcoin mentality and think about it, think it through and study the economics, you actually can make a lucid case to say the smart play is to lever up on fiat debt to buy hard assets.
Okay.
Like, don't rack up debt to buy like something that's going to be gone, like a consumer good or something, but racking up debt to buy a property that you can rent out, or people are racking up debt on the fiat side to buy Bitcoin. I wouldn't do that personally, but you can make the argument to say, oh, you know what? That debt is becoming denominated in ever increasing worthless
Right.
things. So why don't I rack up some debt and walk it across over here
Right.
and buy stuff? So
Based
that's why
on
I kind of like, okay, yeah. I mean, I was the first to always say, you know, pay off your debt, pay off your debt, pay off your debt. You get a monetary windfall, liquidate all your debts. And you should, like, you're paying 20% on your credit cards, right? So
right.
you shouldn't carry any balance there.
Right.
But you know, if you buy a condo to rent, should you buy it for cash or should you lever it up 50%? You
Right.
know, you can make an argument.
Particularly because we're in this moment of hyperinflation. So
Yeah.
it's a bet, it's a risk, obviously, but
Yeah.
it's a philosophy someone can
There
consider.
was a guy named Hugo Stenz,
Uh-huh.
German have you ever heard of him?
I have, yes. My
Yeah.
husband my husband has talked about him and actually went to
Yeah.
school with Hugo's grandson, maybe. I don't
Yeah.
know.
Okay. Yeah.
Hmm.
I mean, I guess the brief upshot for your listeners is he was a scion of a uh, mid-sized industrial magnate in post World War One Germany.
Hmm.
So he inherited a kind of a smallish empire from his father. Like he wasn't rags to riches. He was like rich to then mega riches because he sort of understood what was happening with the reparations payments and the policy track that the government would have to follow. So he knew that the marks would have to be devalued next to zero. So he just levered up out the wazoo, right? And he bought shipyards and railways and coal. He became one of the most largest successful industrial magnates of the Weimar era. And then as the legend goes, you know, near the height of the hyperinflation, he like sold one asset for gold and then paid off all of his debts. However, after I wrote him up in a newsletter, one of my readers contacted me and said, you know, there's this article by his he died penniless. So Hugo Stins somehow, like, he masterfully played the hyperinflation, but he didn't exactly stick the landing on the other side. And he did lose it all in the end. But you know, people often make that sort of reference to what you could do if you really think that the fiat systems are going to hyperinflate.
Hmm.
Again, don't try this at home. I wouldn't do that personally. I mean, I might lever a bit, and I have levered a bit to buy productive assets, but you know, get
Not
rid of
all.
the consumer debt. That's for sure.
Got it. Yes,
Yeah.
absolutely. You talked already about how anyone can kind of get into Bitcoin. You can start, just get off zero.
Yeah.
But one of the things that you've written about is one of the best ways to acquire Bitcoin is to accept it as a payment if you
Yeah.
have a
To earn it.
business. And
Yeah.
if you don't have a business, you say go out and start one. So
Start
talk a little
one.
bit about that.
Yeah. I mean, maybe it's my preferred method because that's how I did it, but I pretty well earned my entire stack just by taking Bitcoin as a payment method. At EasyDNS in 2013, we were the first domain registrar to take Bitcoin as a payment method. Been doing it ever since, just stacking most of the time. I think we sold a bit in 2017. That is, in my mind, it's like a form of dollar cost averaging because the transaction flow is like relative to your normal operations is pretty low. So if you don't have to convert that Bitcoin into cash to operationally run your business,
Mm-hmm.
you just trickle in this steady stream of sats and you just forget about it. And it's just like putting a sheet of paper on top of each other once a day, right? First couple weeks in, it's not much of a stack, but after a year or two, it's like you got a decent amount there. And then as Bitcoin increases in value, you get this sort of like double barreled flywheel. To start a business, I mean, I don't mean to make it sound easy because it's hard to start a business, but it's also never been more possible in this era to be a solopreneur, to do a passion project, to do a content thing, run a blog, a podcast, whatever. Even just learning affiliate marketing and sell other people's products, and you can do that in the Bitcoin space and get paid in Bitcoin. So it's never been easy to start a business and make a go of it, but it's also, you have so many tools to do it now. And I won't say this is like make money fast. It's like,
Mm.
oh, you can be up and running next week and just be like, it takes work. You have to make a trade-off in time. You have to say, I'm going to spend less time doing X, and I'm going to spend more time learning this and getting up to speed. And that's when it's the slowest, actually. A book I read many, many years ago, which really helped me a lot in the early days, was like, it's out of print. It's called, How Self-Made Millionaires Think, Act, or What Self-Made Millionaires Do, Think, and Act, something like that.
Okay.
Whole book can be summed up in 3 words: own a business, right? But they go through this whole thing, and they're talking about, if you really this book, you apply this book in your life, even if you have a full-time job and you can't quit, you'll be a millionaire in 7 years. But if you really hustle, you can cut that to 5 years. And I think in this day and age, you can do it in 3, right? It's just, you have all of these tools to leverage. And so that's why it's this sort of double-edged sword, that we live in this networked world where it's like surveillance is like out of control, and individual people can move markets and move policies and have outsized influence. Well, so can you, actually. As an individual, you have the sum total of human knowledge,
Right.
and the ability to spin up like unlimited horsepower in your favor, probably for nothing or next to it, in your own basement. That levels the playing field to a large extent. I think more people need to understand that it's like, hey, you know what? Yeah, my wife and I were talking about the medical system, you and I, before this thing rolled. It's like, we talk about it's really like the system's stacked against you, right? It's just kind of built against you. But by the same token, you've never had more tools and weapons available to you to just like carve out your own spot within it.
Right. I think that brings us perfectly full circle to how we started talking about the decentralization, and how you don't have to wait for somebody else to decentralize it. You have the power to do it. And a lot of that power is in the smartphone that you carry around with you all day. I mean, you
Yeah.
really can start a business in a weekend with,
My neighbor across the street there, he's got a big business. And it's a farm to table kind of business.
wow.
And it's funny, like, we'd run into each other walking our dogs and stuff. And I'm like, where's your office? He's like, well, we got a warehouse over here. But he said, basically, I run the entire business off of this.
Amazing.
And it's like, okay, well, I guess I'm running my entire business off this laptop I'm talking to you on. So it's not much of a stretch, but
Yeah.
you don't have to be just even like a solopreneur to be doing that. Like his company's like, I think he's got a bigger company number of employees than we do. We're at 20, and so
it's a mindset shift.
Yeah.
So tell us, just to kind of close, what do you have on the docket coming up in 2024 with Bomb Thrower, with the Bitcoin Capitalist? You have, I think, a new report coming out.
Yeah, so the report's the CBDC Survival Guide. It's turning into a book. I do this to myself all the time. That's how the Unassailable book came out. That was supposed to be a PDF lead magnet, and now it's like, okay, I'm 100 pages in. I've got to this is going to be a book. So I really want to get that out in the next couple of months, and then the Crypto Capitalist is just plugging away. We cover mainly publicly traded Bitcoin stocks, and I'm starting to do a little bit more coverage on the cryptocurrencies. And on the Easy DNS side, we want to create an easy path for you to spin up like a BTC Pay server or something. So if you do have a business, you can start taking Bitcoin payments without having to go through a centralized platform, although they do exist.
Right.
And you can just start taking Bitcoin payments. You can spin up a VPS, put your own domain name on it, and then on your website, you just integrate into your WordPress, and you can take Bitcoin payments.
That's amazing. We'll have to look into that. Any final words for our audience before we go?
As crazy as this world gets, I find lately, like, you get so much negative input from social media, and just I won't say tune it all out. You have to be aware of what's going, but this is just one of those times of change. It's like a fourth turning, and just focus on your own goals, focus what you can control, remember what's important, friends, family, colleagues, your own business, and focus on that. And I think, on the other side of this, I think we're headed for a better place in terms of the world will make this transition, and we'll probably have another like enlightenment, like 500-year span of like just expanding prosperity.
Amen. That's great. Just tell people how they can find out more about you or get in touch with you.
Sure, yeah, bombthrower.com. You can get on the mailing list there. You can get a copy of the first report, which was the Crypto Capitalist Manifesto, which came out in 21. And the bitcoincapitalist.com is the premium letter. And if you need hosting, websites, email, you go to easydns.com. I can create a coupon code, Collapse Life, and just type
Great.
that in whenever at the checkout. You'll get a discount off the first purchase. So
Thank you so much, Mark. It was a real pleasure talking to you, and I really did learn a lot. So thank you. And I hope you'll come back and talk to us again once your new book comes out.
yeah, anytime. Love to. Thanks for having me.
Fantastic. Thank you so much.
Okay.
Folks, I'm sure you have lots of thoughts about what Mark just had to say. So let us know in the comments. What did you think? What are your questions? While you're there, hit the like and subscribe button so this video can get out to more people. If you're not already following us on Substack, please do go to collapselife.substack.com and find us there. We put out stories there every week, and we want to make sure you don't miss out on that. We are also on Twitter at collapse_life. It feels a little bit slow in there. I don't know if we're being throttled, but we'd love to see you. If you're on Twitter, come and find us at collapse_life. Collapse Life is the thinking person's guide to civilization and demise. We're all about opening eyes, taking control, taking action to be prepared for what's to come. We're humbled that people like Mark come and spend their time with us and share their thoughts with us every week. And we can't wait to share more insights with you in the coming weeks. Until then, remember, keep your chin up. It's only collapse. See you soon.